Sultan, let me hear me.
Yes, ma'am.
Oh, Olayemi, you're Olayemi, right?
No, no, no. I'm Sultan. I joined through Mr.
Okay.
Isa link. Mr. Isa is one of my mentor.
Oh, oh, that's actually very good. Oh, I'm just getting it. Amazing, amazing. Well done. So let me hear from you. You're happy to be here. Why exactly are you happy? What are your expectations from today's webinar? Do you even know why we are here?
Yes, we are here to talk about capital strategy and market. How stock run, shares, investment.
Mm,
The webinar
that's
is
actually
talking
good.
about
So what
much more about finance.
ah
The webinar
what
is
did you say?
talking much about finance. I said the webinar is much talking about finance, like capital
Oh yeah,
strategic
that's
and market.
actually very good. You're
How to
right.
navigate market.
Is your network or mine? You're breaking.
Yeah,
Can
it
you hear
should be
me?
the network. Yeah, I can hear you.
Oh, okay, sorry about that. So why exactly are you excited? Why are you
Uh,
excited?
basically to basically to learn much about finance, to know more about finance, how to navigate the finance, and to know basically just to know more about finances, regarding of stock, shares, and
That's
investment
really
banking
good.
generally.
That's amazing. So can I say that your expectations during this webinar is linked to why you're happy exactly?
Yes, yes, yes. As I just
Mm-hmm.
my mentor, Alaimi Yusuf, I know this webinar will be much more educative. That's why I joined. Basically,
Amazing,
Mr.
amazing,
Yusuf,
amazing.
Mr.
So
Yusuf is one of my mentor.
okay, that's actually amazing. Good to hear from you. So I would say that I really hope that you would get what you'd get to achieve something from this webinar. Just pay attention, listen attentively, and ensure that you do not just come here in vain. Well done again. I celebrate you. Let me hear from what other person. Oluwa Oluwaranti me. Hmm. Oh. Olu. Olu, are you here? Please, if you are here, let me know quickly. I've said already, I don't want to waste our time at all. So I'm checking the time. So please, Oluwa, are you here? Oluwa Oluwaranti me, you are not here. Peter Odulano, Odulano. Sorry about that. Odulano, are you here? Hi, Peter, are you here? Ayomide, okay. Are you here? Where are these people? Are you shy or you are not hearing me at all? Simeon, can you hear me? Oh, very good. That means I'm still communicating. So why are those that have been calling their names? Why have they been quiet? Why are you all quiet? Are you shy? Please don't be shy. Oh, Ilori Olaoluwa. What about you? Are you here? I guess our participants are shy, except Sultan. That's actually not good enough. Not good enough. So without wasting much of our time, basically Sultan has helped us. He has helped us to he has told us about why we are here. Basically, I think for today is inside finance. Inside finance. So inside finance, what are we trying to understand today? So we have experts in our midst, and they're going to be enlightening us on a lot of things on capital strategy and market. So we are privileged to have with us, Mr. Olayemi Yusau, a great mentor, just like Sultan has said. And I believe Donato Seven too is also a great mentor. So we are privileged to have both of them in our midst today. Please, can we appreciate them? Can we celebrate them? Please let's celebrate them. Make use of the chat box. If you can hear me, please do, please do, please do. Don't be shy. Don't be shy. I'm not saying you should show me your face. If I'm to say you should show me your face, I wouldn't even want to take any excuse for not doing it. But now I'm not even asking you to do. So please let's appreciate our speaker. It's not easy at all, at all, at all. So we have Stephen Donatus from is a trader at CSL FCMB. If you are hoping to be someone that life too after school, I think you should appreciate these people better. Our participants are not doing anything. Sultan, I can't see your emojis. Who else again is here? Ineka, I can't see you. Ezekiah, I can't see you. You guys are not here to sleep. So basically, I don't know why no one is doing anything. Oluwa Kumi Funre. Oya, kuwa fún stickers, kuwa fún emojis. Harolua, Rabiu, Peter. Please, let's appreciate this one. So we have the second person, Olayemi Yusua. So investment banking analyst at Iron Capital. Let's appreciate this one. So we are so privileged again to have you in our midst. So without wasting much of our time, others have refused to say something, but I'm actually really glad to hear from hear from Sultan his expectations about this, or from this webinar rather. So within the few minutes that we have to be enlightened, and to our speakers, please, if you can hear me, let me know that. Mr. Stephen and Olayemi, please, can you hear me?
I can hear you clearly, Faith, if that's your name.
All
Thank you
right,
very
thank you
much.
so much. You're welcome. You're welcome. So basically, our goal today is to follow the life of a deal, right? We're talking about finance, and we know that when it comes to finance, we would always think about something that would generate, not just that will generate, that will bring about wealth, not just riches. So looking at so our goal basically is to follow the life. We have a few questions for both of you. For each question, we'll start with the investment backers deal. That's Olayemi Yusau, and then immediately would hand over to our donators to continue the story. So our first question would be, so to my IB guy, Yusau, yes, that's your nickname now. So can you hear me? I hope our participants are with their jotter and pen, because it will not be great at all for you to join this call and still go the same way that you have joined. It will not be really nice. It is better that you don't join at all than to join and then to be considered that you have just wasted your time. Please let us not do that. Knowledge is power, and as you have gotten free access to this kind of knowledge, you should not take it for granted. So please ensure you maximize it. If you have questions, please note them down, and we would ask our great speakers once they are done. Okay. So Olayemi, please, can you hear me?
Good evening, Faith. I can hear you loud and clear.
Yeah, good evening. Thank you. So please, can you take us to the beginning? How does a typical capital raise or deal process start for a company here in Nigeria? We are in Nigeria, right? So let's just niche down to Nigeria. So how do you think a typical capital raise or deal process basically starts for a company? You want to raise capital or deal process here in Nigeria? How do you think one can start here in Nigeria?
Okay, thank you for that question. I'll be taking that from the perspective of a company, and then I'll just, let's say, just mingle it with the part of advisor, the investment bankers. Of course, there's something we call corporate finance in finance, whereby companies will try to manage their finances and also to raise capital, as to say maybe they want to expand, maybe they want to acquire another company, maybe they want to do whatsoever strategic things they want to do. So I think the first thing company will do is, before they even come out to say they want to raise capital, so they might have seen, say, what they want to do. There should be, say, a goal, a end in mind goal that they want to achieve for raising the capital. So for instance, we've seen a couple of capital raise in the market. So we've seen banks coming out to come and raise money. Why are they raising money? To meet the requirement of CBN. We've seen some other companies coming out to say they want to raise money. For instance, Alex is in the market. They want to raise money to acquire some plantation to enhance their capacity. We see Presco raising money currently to also acquire a plant like that. So first thing first is, why are we raising money? Then when we now understand why we're raising money, so the next thing for a company to do is to consider which method of capital raise are we considering. So are we raising money in debt? Are we raising money in form of debt, or are we raising money in form of equity? So it's now to the company to decide which method of capital raise they would like to employ or to adopt. So we should not forget that, I'm thinking as a company now, like I work in a corporate finance team in a company. So it is my duty to think of, okay, if we say we want to raise equity, there is possibility to say there will be dilution in equity. Okay, if we consider, debt, debt is just that there is tax savings, and then our balance sheet, there will be leverage, there will be injection of debt, then of course we'll be servicing debt with interest. So after considering the both, we could now consider, I think we will go with this, let's say maybe equity, or let's say debt instrument. I think there are some debt instruments in the market also, like UAC just raised debt, and then the purpose of that debt is to repay some debts and that arises from their chi acquisition. So, and we've seen a lot of equity. So it's now to determine which method do we want to adopt. So after that has been adopted, so it is now when the IB guys comes to play. We IB guys, of course, no company will come and knock your door to say, Oga, we have transaction for you. It is the IB duty to make sure that you are up and doing, you have your ears to the ground, you know what's going on in the market, you're following through every news, everything, to know the company that is come and say they want to do that, even though you know it is being announced. These are top level decision making. So that's now where IB guys comes to play. There are three things we call in IB. We call it origination, execution, and distribution. So origination is where you bring in the deal. That company that wants to raise money, you outsource that company, and then from there you get the deals as a mandate. You are authorized to help the company to raise money. We should not forget what IB does. IBs are just like they are like intermediary. I don't know if you've been exposed to something called financial intermediation. So they're just like intermediaries that connect the buy side with the sell side, or let me just say the deficit unit side to the surplus unit side. So when I'm saying the deficit unit side, the deficit unit, the people in need of fund, and the surplus unit, people that have excess, the investors. So something like that. So that's now where IB comes to play. So you liaise with the company, you advise them on they've determined what they wanted to do, but it's now you to advise them on the best thing to do. Oh, let's do it this way, let's do it that way, and not. Then there will be some execution process. Just like I said, IBs involve origination, execution, and distribution. There'll be some execution process whereby you put in some necessary documents together, and then make sure that all things are in places. You meet the regulators, Security and Exchange Commission, it could be NGX. Some if the company that is regulated by another entity, say CBN now for banks, you need to meet with CBN also. For company in telecommunication, you need to meet with the likes of MBS to get approval to proceed with the capital raise, and some other paperwork that need to be done. Then after that, we're talking about capital raise. It could be equity or debt, just like I mentioned. So the last phase is the distribution phase, whereby you engage investors, you discuss with investors. You see, they call IB guys, they call us the sell side. So there's no way you be a marketer in one way or the other. So you engage investors. If it is equity, you do your analysis, you do your pitch deck, you know about the company. That's where analysis and how it comes to play. You do research, you provide accurate data, pitch deck, whereby you can talk about the company. Even if they wake you up from sleep, you can talk about the company. You can tell this the company, their financial for the past 3 years, they've been doing this, they've been doing that. You're trying to tell investor that, see, we are not selling shit to you. So we have different investors. It could be institutional investor, it could be HNIs, it could even be government. No, it could be government. It could be people from abroad, different investors. So you're helping the company to raise money. So that's the work of IB. So company will not just go and raise money directly in the capital market. So it is the IB that will help them, just like to connect them with the surplus in the country. So you help them to raise money. And it's with debt instrument also. You engage with investors. It could be insurance company, it could be asset managers, it could be pension fund, those that are investing community. So you help them to raise the money. And then, of course, IB, you're not doing it for free. I think a commission that will have been predetermined will be attached for capital that is being raised. So I think that's just an overview of how to raise capital raise in, should I say, Nigeria, just capital raising process. So that's that. I don't know if you get what I mean.
Sure. Thank you so much, Olayemi. That was enlightening. Meaning that before even be involving the IB guys, there's a need to first of all understand why. Of course, why. For everything that one decides to do in this life, there's a need to understand the why behind why we want to do things. So basically, there's a need to understand the end. There's a need to have the end goal in mind. Like, why do we want to do what we want to do? And then I haven't gotten the why. Which method of capital raising do we want to imbibe? Do we want to go for debt or we want to go for equity? So thank you so much for that. Then we'll come to IB guys, and then of course you said there should be a commission. You're not supposed to do it for free. So thank you so much for that. Please, if you have questions, guys, keep noting them down. Once it's time for Q&A, you are going to be given the opportunity to do not come. Also leave with those questions. Do you get it? So now to my market guy. Stephen, are you here?
Yeah, I'm with you, Faith. I'm with you.
All right, thank you so much. So you've listened to what Olayemi says. So now I want to ask that once that process starts, that process of understanding, having a goal in mind, basically saying that, okay, this is what we want to go for, either debt or equity, then involving our IB guys. So once the process starts and the company decides to raise capital publicly, When do you and your market team typically get involved, and what's your first step? I don't know if you get the question. Do you get it?
Yeah, I think I did. I did.
All right.
I would say when it comes to raising capital, just like Ibrahim has said, there are two broad ways: either debt or equity,
Yeah.
or joining both of them. Because at times some company can, do debt and also equity. So the question you asked was, what's the next step for your marketing team strategy and how to go about it? Now, the little I've seen in the system, if Ibrahim will agree with me, like I said, he has more command in this field. But like I said, since you're in the market, you should know a little about everything. I don't really have much knowledge when it comes to capital raising, but I'm a very realistic person. But I will tell you the little I know. First things first, there are counterparties, a lot of parties to transactions. Now, people like doing transactions with people they have ties with. So when it comes to building your marketing team and whatnot, first and foremost, you look at where you have the higher powers, where you can move things. I'll give you an example. FCMB doing a public offer, most of the federal government savings bond is routed through FCMB. Ibrahim will take note of that. Ibrahim knows that. Why do they use FCMB? This goes down to um, competence over time, um, ethnic ties, whether you want to like it or not, the country we find ourselves, ethnicity and religious play a very, very, very important role. I've seen it. I'm talking about experience. I'm not talking about somebody writing a book. I'm not talking about somebody giving you an essay. I'm telling you what is obtainable in the market. Your competence, how you can deliver goes the largest, and as well as ethnic ties. So you see, government want to raise a bond, they use FCME because over time they've been using it, and also powers in the corridors of powers. Now you have most of the Western factors or Western people on seat. So definitely, I would like to do a transaction with my brother, knowing fully well that this would not go south. So when it comes to building a team, you're having a team that can speak to major people. The board of directors and the major key players have done the underlying fact, the underground work. So it's now left to um, bringing other parties. They call them issuing houses, uh, parties to transactions. So most times people do, like I was saying, people do transaction with people they believe in, people they know they can deliver. So they route this transaction through them because they delivered in the past and they have the capacity to deliver. So your marketing team are basically speaking to, issuing houses, trying to see how they can route transaction through them. I believe everybody can hear me. What I'm speaking to majorly is making sure that we meet our targets. What do we want to raise? You see, if it's an equity, what's the number of shares you are trying to raise? Who are the people we look out for? We first of all go for big corporates, large corporates. For example, in the space I play in PFA, they call them pension funds. You have, I can call a little name. We have Power Pension, we have Crusader Sterling, we have Stanbic, which is one of the major, if not the biggest pension we have in the country. We have Stanbic, major player in that space. We have Leadway. I think Leadway is becoming the top in that space. So you go to pension. Why do we go to pension? Because pension has a lot of funds to play with. They have a large capitals. I want to understand anybody know what I mean by pension. If you're working as a corporate person, you have a pension account, a retirement account. So most of this pension fund has large capital to play with. So we go to them and seek or and solicit that they invest in our business or they invest in our company, knowing fully well that we've stood the test of time, we've delivered over and over again. So it's very easy for returning companies to raise capital. But for new companies, what you rely on majorly is your credit rating. We have Augustus and Co, one of the major rating agencies in this country. So if they give you a good rating, I mean, that will draw investors. So apart from large corporates and pensions, then we'll go for HNI clients. Who are the HNI clients? We look for, Nigerians in diaspora that have a lot of, foreign currency to play with, and we connect them. That's why your marketing team has to be robust. You have to have people who have who have experiences in the field of knowing how to reach out to Nigerians in diaspora, who have a connect in PFAs, who have a connect in large corporates. You can't have a team that don't have that experience. So what they do on the long run is that for those new people coming, I'm trying to measure it in such a way you guys can understand. So if you are just leaving the university and you find yourself in such committee, it's a time to build up. What are you building up? You already have the knowledge. You are building up connect. Because like I said, knowledge you take into the door, but connect. Look at Ibrahim. I know Ibrahim, because you're in the market and we talk from time to time. We try to route transaction through ourselves. He works with Ion in capital, but I know he has routed the transaction through me. Sterling raised capital earlier this year. So the major thing is to build a team that has people in places you need the capital to come from. I don't know if you understand me, Fritz. I don't know if I can just put a pause there. I don't know if I've answered your question.
Sure, definitely. Sure. Thank you so much. I really
Yeah,
appreciate
thank you very much. Thank you very much, Fritz.
So I really hope you. So while started with his explanation, he said something about your competence. People would only invest when they believe in what you have. I don't know if anyone knows Lions. Anyone? Just signify with emojis or something. Lions Den, anyone? No one? I don't want to believe that. Hello? Lions Den. No one has heard of it before. Hello? Okay. Am I still communicating? Can anyone hear me? Okay, that means I'm still communicating. So Lions Den, I don't know if anyone has seen that before, but basically you get to pitch your business ideas and all of that. So before you can convince investors basically to invest in your products or your business, there's a need for you to have a well-grounded knowledge of what you are doing. Your competence matters. You have to even be able to, you have to believe in yourself. You have to have enough faith in your own business before you can get others to have faith in your business. So you have to have enough competence for others to trust that when they invest, there's going to be something. So just like Stephen has said, it is important that you are competent. You take time to grow. You take time to ensure that you put all things necessary in place before you start looking for people. For me, I think it is better that you don't even make attempt to look for people when you don't have a clear understanding of what you want to do exactly. You don't know your why. Said, and then you are not competent enough, because it is good to rather take your time to know all these things and then look for people. Because if you don't take your time and you look for people and you get people and you don't do well, it's going to be it's not going to be good on your self-image, and getting people next time would not be very easy. Unlike if you have done the necessary thing, then you look for people, getting people next time is going to be really easy. Am I wrong? Olayemi, Stephen, am I wrong? Isn't that correct?
So that's fine, Faith. That's fine. That's fine.
Yeah. So moving on. Thank you so much. Moving on to the next question. I hope I still have my great mentor, Heidi Guru Olayemi is out here.
Yes, Faith, I'm still here. I'm still here.
Okay, so let's move to the second question. So a key part of your job basically is helping to set the price or valuation for the deal. So what are the main factors you consider when setting that price in the Nigerian market? I don't know, let me come again. So basically a key part of your job is you help people make the right choice. Should we go for this or that? Which business should we invest in? Should we merge or not merge? So key part of the job is helping to set the price or valuation for the deal. So what are the main factors you consider when setting the price in the Nigerian market?
Okay. I think I'm very sorry. You see, in Nigerian market in general, maybe because I now work in high B, makes me to now have different perspective. Now, you cannot just be comparing Nigerian market to all these uh, developed market like US, UK, where we talk about JP Morgan's, Goldman Sachs, and all those ones like that. Why? In JP Morgan, Goldman Sachs, Bank of America, uh, M&As, deals, all those things are their bread and butter. They're like, you feel like, oh, but in Nigerian market here, they have, I think, if not for the banking recapitalization, we wouldn't have seen any equity transaction in the Nigerian market. And some maybe other recapitalization. Of course, this year was kind of fear. I think last year was just banking guys we were seeing. This year, I think we've seen some other transactions. We've seen Ella Lakes, we've seen Tip, we've seen Presco, we've seen FitSyn, and some other companies that are not banking guys that are coming to come and raise equity. I think we've seen Champions Brewery also, we've seen PFD doing right issue or public offer, all of them. So coming back to pricing and valuation, well, you know, as an IB guy in Nigeria, you might tend to be more of debt transaction. I will not lie to you. You might have done, let's say 8 to 2, maybe 8 debt transaction and say two equity transaction, let's say in 6 months. So that's how it plays in Nigeria. So this is how it goes. Assuming we want to price a debt transaction, this is where your macro condition comes to play, your inflation rate, your NPR rate, all those things factor into pricing when we're talking about debt instruments. For instance, we have short-term debt instrument and we have longer period debt instruments. So talking about shorter period debt instrument, we talk about treasury bill. These are money market instruments actually. So we talk about treasury bill, we talk about commercial paper. So you see, when they released inflation reports, this I think for November was 14.45. So immediately they released that inflation report, it reflected in the debt market, the yield attending downward and all like that. Thankfully that Boda Cardoso retained this thing, NPR at 27%. But then after retaining NPR at 27%, there was an adjustment. There was a significant adjustment to the asymmetric corridor, whereby there is 50 basis points plus and minus 450 basis points. So that will lead banks that used to go and put money with central bank. So that will give them like, go, no, if I think the way it works is that if they are borrowing money to central bank, they'll be getting, say, what's it called? Central bank will be collecting from them at, let's say, I don't know if I'm not missing it wrong. Central bank will be borrowing money from them at a, let's say, 10 plus 50 bips, and then if they are lending to central bank also, although let me go that way, I think I'm missing it wrong. So that puts them to now coming to investing in debt instruments in the market. So NPR inflation rate plays major role in debt instrument pricing. And when we're talking about pricing in debt instrument, we're talking about interest rate that you want to charge for your debt instrument. So, for instance, what is government treasury bill doing? The last auction they did for 364 days was 17.51% that they charge. So now if government is saying charging 17.51% for 364 days treasury bill. So a company that wants to raise commercial paper now, that company will definitely add a spread. What I mean by spread, a basis point, or let's say maybe few percentage above what government is issuing its own treasury bill. So now, if you want to also issue a shorter instrument, so you will issue at a, let's say, a percentage higher than what government treasury bill is doing. I think in shorter instruments, they liken it to treasury bills. What is treasury bill doing? Okay, I think we can do, if treasury bill is doing 17.5, then I think we could do a discount rate of, say, maybe 18%. Yeah, I think that's attractive to invest a little bit. Or say, no, 19% could be higher. But then don't forget that treasury bills are government's instruments and they are risk free. Worst case scenario for government is that they will issue another treasury bill to clear out the one they want that matures. They issue another one to clear it out. So there's no problem with government. But then you that you're a corporate firm, you are, let's say, the likes of Dangote, the likes of UAC and all like that. So there's a kind of risk that is attributable to you. That's where people say there is need to be a rating agency that will rate you and assign a rating to you to say, is it BB, is it AA? Those rating is just credibility that shows the ability of you repaying the amount you are borrowing from the market. So if you are pricing a debt instrument, you liken it majorly to, let's say, similar instruments of government instrument that you add a spread to it. But at times, I don't want to go complex. There might be some calculations that comes to bond instruments. Say there'll be some duration, Macaulay duration, modified duration, just to determine a price doing IRR or whatsoever. But then that's just the technical part of it. But then just a very simple part of it is just like, look at what government security is doing. Then, of course, you are risky since you are not government. You had a little spread to it. Now coming to equity instrument, of course, yeah, equity instruments, let's say equity, that's issuing of shares. So we want to issue share to the public, and then you want to determine the price at which the share will be priced. Or say they want to issue, for instance, Sterling issue share about 12 billion shares, and it was priced at 7 naira. A lot of instruments are going on in the market right now. They have a specific price. Well, for public traded company, there might not be need to do rigorous valuation, but there's always need for valuation also, because we should not forget that in valuation we have market valuation, we have DCF valuation, we have asset-based valuation, we have relative valuation. The market valuation, the market cap of the company is a value. It shows the value of the company. It's a ready-made valuation for the company. So if my price in the market is doing 10 naira and I want to come and raise money, so I can easily say, guy, okay, let's raise this money at a discount to the market price, or let's do right issue. You know, right issue are always at a discount to the market price. So if my market price is 10 naira, I can just say, let's do right issue at let's say 8 naira. So something like that. So I don't need to go and take advisor to go and do rigorous valuation for me. My valuation is there. People are seeing my result. They are seeing my profitability. They are seeing my earnings yield. So that's that. Then if it now comes to say there's need for us to do valuation, it now comes to the type of industry we are looking at, the types of company we're looking at. I think if it's a mature company, we can consider using a DCF valuation to forecast the projected cash flow of the company and discount it. Consider the, let's say, some other factors that are qualitative factors, such as, let's say, the management team of the company, the year of experience of the company, the SWOT analysis of the company, the 5 portals model. Is there, like, imagine a company like TIP now. I think that company is still the only company on the NGX, a major company in waste management and already entering oil and gas aspect. providing solutions for them, then you put in all those qualitative factor into consideration and use that to getting all your assumptions, then you value the company. Of course, you are the one doing it. You should be able to have reason for every number you are putting there for a company. And then we could just triangulate the valuation with other valuation metrics so that you're not just biased. DCF could be, I don't know if anybody knows DCF, so that I'm not just talking to myself. Discounted cash flow method I'm talking about. So you can as well triangulate the valuation with other valuation metrics, look at similar companies in the exchange or that are publicly traded. So you could just look at, let's say, Dangote Cement to WAPCO to BOA, similar companies I'm trying to say, the consumer goods sectors, we have a couple of them. So depending on the sector that are of similar size, and of course they operate in the same industry, look at you do your metrics on them. It could be price to earnings ratio, it could be enterprise value to EBITDA, it could be enterprise value to sales, and so on like that. So you do that also to just do evaluation for the company as well, just to find out, look at the market approach, not just this year, because this year you can be biased. You can be say, with this company did this year, you are projecting that they can do times two. Of course, we've seen that there are some companies on the NGX that they've in quarter three, they've even passed what they did in 2024. Of course, you could easily say that, but then don't forget it's projection. Things might go other way around. So that's why you need to imbibe market approach also to do your valuation and determine the price. So that's for that. I think when it comes to private equity transaction, whereby you need to, let me just do it. When it's private equity that the company is not on the exchange, people are not buying and selling the company and all like that. So that's now the key real valuation comes to play, because you want to determine the value, you want to do such and all like that. So that's where you need to put in all your assumptions together. But for public traded company, the valuation is always there. It's just for us to just have another opinion around it, do it this year, so that you can now talk about, see, this company is trading below what it ought to be trading. It is like, of course, yeah. So it is trading below what is underpriced, just like all the banking sector in Nigeria now. People could say, they are underpriced based on the valuation that people have been doing on them. So something like that, Sha. I don't know if I'll be able to provide a response. I was trying to make it a rounded response, but I don't know if I'll be able to.
Sure. Thank you so much.
Yeah, thank you so much.
That was a lot to digest, I must say. But in a nutshell, I'd say that it is very important to always put into consideration government securities to know where one stands, and of course, capital investments like appraising some things, using some techniques like you have said, DCF and all of that. And I think that's very important, especially those ones that put into consideration the time value of money, right? Amy?
Yes.
The summary. So thank you so much, guys. I hope you have your questions. If nothing is really clear to you, just ensure you put them down so you can ask later. Is mentioning some so what's it called, terms if you don't understand this, you have NPV and all of that, just later. So now let's move to our market guy. Steven, are you still with us?
Yes, I am. I'm with you.
Yeah, so all right. You can help us round up what great Ivy guy said concerning this. So
all right. So
we all understand that the banker sets the initial price. Some cases the banker actually sets the initial price. So the moment the shares or bonds start trading, you take over, right? So how do you and the market react to that price? That initial price of the bank. So is it usually right? And what happens if it is not? Do I come again?
All right. So did you just speak to the banks? I was in the bank. How do you react to the prices of the bank? Is that what you're talking about? Is that what you said?
Yes, the banker sets the initial price. So the moment the shares or bonds starts trading, you take over. So how do you and the market basically react to that price set by the bank? Is it usually right? And what happens if it is not right?
All right. Okay, so I don't know if I'm allowed to share my screen to show something.
Sure, that's not a problem.
All right, so I am opportuned. It's a privilege to have the Bloomberg terminal in my personal system. I don't know if anybody heard of the Bloomberg terminal. It's a terminal for real time information, provides real time information. Yeah, see my boss. My boss already did. So I want to show you guys something. So okay, let me share my entire screen. So that will be easier for me to always navigate through. All right. So can you guys see my screen? All right. Okay. So I'm seeing reactions to that. All right. Now, so look at the screen I'm sharing now shows speak to sectors and okay, major indexes in Nigeria, and then it break down each of them. Now, the Nigerian market is highly sentimental. I said that with emphasis, highly. It's a market that moves and responds to sentiment changes. A little information drives the market. I'm speaking to the equity, not just the equity, even the fixed income. Now, Ibrahim was saying something. He said, Olayemi, yeah, prefer calling him, Olayemi, was saying that um, a little tilt in the equity space makes the fixed income space rally. Now, you said what controls price determination? I think you're speaking majorly to price determination in the market. Now, the market is highly sentimental. Okay, let me just choose from now. We have five major sectors in the Nigerian market. So we have the banking index. This is the banking index. We have the oil and gas. I know everybody knows this. I mean, you guys are very smart guys. Oil and gas. We have the insurance. We have the industrial, and then you have okay, banking, consumer, industrial, oil and gas. Yes, banking, consumer, industrial, oil and gas, and insurance. Yeah. Now, other factors there. Now, if you look at my screen, you could see as I'm scrolling down what some of these companies on the that's listed has done on a month basis and on a year basis. Now, I'll pick some of these companies and explain how sentiment drives this market. Just few of them. Okay, now, Olayemi, we are having Elalix. I don't know if Elalix have concluded their public offer. Now, let me look for Elalix and show you what they've done in the space of this month. In the space of this month, Elalix should be in consumer, if I'm not wrong. Yes, yeah. So Elalix is in the space with Okomo and Presco. It should be if I'm not mistaken. Where is the Elalix? Sorry, I'm looking for it, guys. Yeah, that's Elalix. Can you guys see my screen, please? Yeah. So if you look at Elalix, now look at on a monthly basis, 9.41%. Now, Elalix is a stock that started the year. This stock you're saying trading around 13 naira 95 was trading as at February, March, 3 naira to a particular share. A unit of Elalix was 3 naira. Now, what does Elalix do? I want to give you background. Elalix does refining of palm oil palm. So they get the oil palm, they process it. I think they make oil at the long run. If I'm not mistaken, are we in the same page? Please help me with that. I think their end product is oil, right?
Yes,
palm
yes,
oil.
yes, yes, yes.
Okay, beautiful. Now, another player in this space is Okomo Oil. Another player in this space is Presco. So Presco, Okomo Oil, and Elalix does practically same business. And then Elalix came into the market to raise capital. It was doing 3 naira. I remember at the beginning of the year. I bought it. I don't know if I can speak to it. I bought Elalix 3 naira. I bought it 3 naira. I sold it at 7 naira. Then I re-entered again at 7 naira. I sold it again at 12 naira. What am I trying to drive at? The major determinant of price in this market is sentiment. People saw a company that does the same thing Okomo Oil and Presco does, but because Okomo Oil and Presco are trading around 1,000 levels and 1,005, So because I cannot enter those stock at that price, because probably I'm a young investor, I go for a company that does same thing they do but quite cheaper and has prospects. So when it has prospects, it has the tendency to grow, and I as a young investor can grow with it. I can grow with it. You understand? So if you hear the Nestle of our time, the Nestle, the Nigerian breweries, I've heard of people say they bought Nigerian breweries and Nestle as 50 kobo. And Nestle is currently trading around the 1,005 levels, if not 1,008, 1,000 thereabouts. So when it comes to price determination in the market, the sentiments of the market drive it to a large extent. Now, for last month and 2 months ago, there's been a lot of talks around CGT, capital gain tax, and this on its own has, weighed on the market so much. November alone, the market did the worst for the year. So far, so good. November was the worst month for the equity space. Dropping all it has done. Now look at the market currently. NGX is currently at 47.73 year to date. That's the all-share index. That means what do we mean by the all-share index? I'm saying pegging the whole index in relation to the total market. What can we say the market has done so far, turnover in percentage? It is 47.73%. Now, this market just start picking up this month. Olayemi can lay emphasis to that fact. And at November, we had a lot of bearish run. There was negativity all around the market because people were confused. You're saying that you start charging tax on our capital gains and you are pegging it at 30%. How much are you making in the market that you are paying 30% of your gains to the government? There was a lot of panic. Foreign investors, they call them FDI, FDI, foreign direct investment, FPI, foreign portfolio investment investors. We're not looking at it. Me that entered stocks like bank. The banking sector is undervalued. I entered these stocks around 1-digit levels. What I mean 1-digit levels, maybe around 5 naira, 10 naira, 9 naira and below, 1-digit levels, and now they are trading around 2 digits. The best so far in the banking space is the likes of Stanbic and GT, trading around 80 something naira, and it's still undervalued. And you are saying that you want to now take away 30% of our gain. There'll be a lot of panics. People are panicking. People are running away. People are trying to say, how would I do that? How am I supposed to come, and give away this? So there was a lot of sentimental influence in the market. So the market's price is majorly determined by sentiment. And like Olayemi have said also, there is the monthly inflation figures. Let me show that. I have a chart that speaks to that. Yes. Yeah, so look at Nigeria at a glance. I'm looking at this, a report from a company, ICO Insurance, did a report. So this is inflation as of October, 16.05. And then as of November, we have 14.45. What does that tell you? It tells you that inflation rate is dropping, though rebate, and then it should make what? It should make the fixed income space attractive. The last auction that was held this week, which was on Wednesday in the TB space, that's the Treasury bills, we saw rates moderating around the far end of the curve. That's the 1-year maturity. Let me see if I can show that. So I like speaking to numbers a lot. I like speaking to numbers so we can know what we are speaking to. Let's see that. I want to look at NITI. 12 months, 1 year. Sorry about that. Hope you can see my screen. Because when we speak like this and there's no data to back it up, we might not really understand what we are saying. Yeah, so look at the 1 year what's it called? Treasury yield. It's playing around 20 levels. In the public in the primary market auction that took place, it closed at 17.5 levels. So people are trying to end the year, even as people are trying to spend money this festive period. Those investors don't know how the market has been. No, Nigerian market is like a season. It's like your rainy season and your dry season. So there's always alternating season. So most people who understand this and are now trying to take position in the fixed income space, knowing that it will rally, knowing that the rates are attractive, and then in the equity space, people are keying into full-term, full-year dividend. I mean, in the banking space, Zenith paid sooner 50 kobo for interim. So imagine what they'll pay for full year. So that's why you have a lot of rally in that space. As of last week alone, I did a trade of almost $2 million for one client for Zenith. They were buying Zenith. I like to speak to people when I'm speaking to people like this. I like speaking to them. What is obtainable in the market? What is happening right now? Not just ESA and the rest. What is happening? So right now in the Nigerian equity space, people are taking position in the banking sector, in the consumer goods. Why consumer goods? Champion Brewery is rallying. Nigerian Brewery is rallying. There's Dangote Sugar. There's what's it called? There's Boa Food. Let me show you my personal data. Yes, that's what I was working on while I was taking attention to us. Yeah. So if you see, this is our close of business yesterday. See the top gainers. Also savings. Also savings has just been they revoked their license. So I think that was the mix of the data. Look at First Bank on a weekly basis. Look at Guinness, on a weekly basis in terms of gainers. Then look at volumes of transaction, top value and top volume. First Bank, you see, majorly the banking sector are playing in that space. So people are taking positions, to make sure that they are not left out. So when it comes to price determination in this market, sentiment drives it. There is already sentiment in the oil sector. I mean, Dangote coming out to say, reducing the price of PMS, that's premium motor spirit, that's the normal petroleum we use before, has created a lot of sentiment in that space. You see the likes of Seplat and Aradel that are rallying, in that space. And then there is rumor that Dangote will be coming out, to the market next year. So the market is highly driven by sentiment, highly driven by sentiment. So people invest in what they hear, basically. I don't know if I've been able to answer your question to that.
Hmm, that was incredible, Steven. Thank you so much. I love the fact that you could back all you said up with facts. Um, Obvious facts. Basically, that's something really amazing. Makes learning easier. So yeah, said that market is based on sentiment, and that's actually very, very true. People will always say, okay, it's just like inflation. So they say, oh, I think I should let me buy plenty things now because I know that by next year though I won't be able to get much. It's just like even traveling for Christmas. It's Christmas period now, and then many of us say, okay, it's actually good for me to travel home now because waiting till next week there's gonna be what the bus is going to be really, really expensive. So we tend to always weigh our options, saying that okay, by now things should be fair, by tomorrow things would not be okay, so let me go for it now. So presently it's not so good, next week is going to be better, so I would rather wait and go for it next week. So thank you so much again. That was really enlightening. So moving on, we are moving to the next question. However, Simeon will be doing the honor of from here as I have to jump at something quickly. So thank you so much again, Stephen. Thank you so much, Olayemi, for your wonderful answers so far. And I'm certain that that would continue as long as this call continues. So thank you so much. And over to you, Simeon. Are you here?
Yes, I'm here. Good evening
Yeah.
to our speakers, Mr. Olayemi and Mr. Steven. Good evening to all the listeners. I'm Simeon, the head of public engagement for this beautiful club. And well done to Faith. I'll be taking over from here because she has a little bit of an engagement. So are we good to go, Faith? All right, let's just continue.
Yeah. Yeah.
Good evening, Mr. Olayemi. Can you hear me, sir?
Good evening, Simeon. I can hear you loud and clear.
Yeah, so my question for you, sir, is that during the
Please
meetings
stop
you've
the use
had,
of Sam. Stop the use of Sam.
all
I'm
right,
with you.
good, all right. So my question for you is that during the meetings you've had with investors as an experienced investment banker, What are the common questions or concerns you hear from potential investors about a Nigerian deal that they are interested in, or a Nigerian deal that's about to take place? What are the major concerns of the big investors? Thank you so much. So you
Um,
can.
yes, I can hear. I heard your question. Well, um, to put color to your question, I'm just trying to not limit it to debt and equity. So when you talk about the deal, which deal are you saying? Is it just debt and equity? Although there's kind of other kind of instruments in the market, asset back, these
Any
digital
kind of
asset.
deal,
Okay,
debt
any
and
kind of.
equity, M&A,
Okay,
any kind of deals, restructuring, any kind of deal.
okay. Uh, investors question actually. Um, there's this thing they say that investors are always rational. They want to see if the investment they are putting their money into, there is possibility of getting that return on investment. For instance, let me talk like an asset manager here. Um, for some debt instruments, asset management. What they do is that they collect money from investors, and let's say they have a mutual fund account, they collect money from several investors, and they put the money into use on behalf of the investors and promise them, let's say, a range of rates, let's say, depending on what inflation and treasury bills are doing and commercial paper rates are doing. So that's what the rate they promise their investors also. So knowing that they can go and put the money into a better use, say, I've collected money from investors and I've promised them, say, 19 to 20% rate. Deep down to me, I know I can go and put this money into use where I can get 50%, or where I can get uh, 30%, or where I can get percent way better than what I've promised my investor. First thing to them is that they will never invest in any instrument that offers rate that is below their cost of capital. Their cost of capital in this sense is what they've promised investors. So I've promised investors 19 to 20%. So they will never invest in any instrument that offers rate below 19 to 20%. That's first thing. And then you should not forget we have different institutional investors in Nigeria. We have the pension fund, we have the insurance, we have a lot like that. So that I don't just position my mouth anyhow. So those people, they have cost of fund, and by the time they want to invest, so there should be a matching system that will lead to a spread that will now give them that, oh, there's a spread of so maybe minimal percentage, or that will be a gain to them. Investments, banks, they invest based on, they benefit from spread, what they promise investors, just like normal banks. When you save with bank, they they give you, let's say, maybe 8 to 7% or so ever percent on your savings if you put your money with them, and then they are putting the money into use for to get some percentage. That's how it works for some other key investors like that. So that's that for debt instruments. And then for equity instruments, of course, this is exactly, equity transaction. We have different types of equity transaction that can come to play. It could be private placement. I don't know if it could be private placement, it could be right issue, it could be public offering, and also it could be offer for sales. These are primary market transactions. So that's where IB guys comes to play. So if it's a private placement is just like um, issuing shares to strategic investors, say 2 to 3 or 5. I think maximum, they always like maximum of them are 50, I guess, or 30 or so. So for IB guys to help company to sell shares to strategic investors, you must have identified those investors. It could be institutional, it could be the banks like AFC, it could be companies that have fund for equity, it could be anybody. So we've reached out to them to say, okay, there's this company coming, so they have this, you market the company to them. If they have interest in it, they could take a stake by buying the shares of the company. Strategic position, that's private placement. So that's that. If it is right issue, your problem might just be minimal, because right issue, right issue are shares that are issued to the existing shareholders of the company. So if it is right issue, of course, yeah, the lion shareholder in the company, the likes of, say, in First Bank now, we know this guy has the largest share, the likes of Otedola, and he keeps buying. I think throughout last week, he bought a lot of stock. He bought several stocks of First Bank. We saw First Bank going up, he bought. So people that are key stakeholder in the company that have 5% and above stake. So they are easy, they definitely take up their right. Even though if people do not take it up, they'll still be the one to buy other people's right. I think there was a right issue that UBA did the right issue, and it was very funny. I don't know if it's strategic, if it's a mistake, whereby the right price was trading way higher than the market price. So it was very funny. And of course, right price supposed to be trading lower than the market price. But then it was funny that time. So that could limit people to take up their rights. Maybe they will be the one to buy it up. But for right issue, uh, people you are selling to, there's no need to stress yourself on promoting or selling the company, telling them the how to, telling them what the company will do, what they are planning to do, why they should invest, all those things, because there's always why invest in a company. Equity transaction is very, very difficult. I'm not lying to you. You talk, you must, like, as an investment banker, you must be on top of your game. You must know every reason why you are telling investors to come and put their money in the stock market, to come and buy in the primary market, and so like that also. So I think one thing that company used to do also is to make sure either the offer price will be lower, very, very lower to the market price, so that would be like an incentive to investors who have seen the transaction of the company, the way the company has been doing, the movement of the company, the good prospect about the company, that will give them like, oh, this a discount now, let's go and buy in the primary market. Those are things that companies do to make it enticing to investors. Instead of them just go and buy in the primary in the secondary market like that. So I think that's that for right issue. But when it comes to public offer, investment bankers at that point, you talk to everybody. You see LR Lakes now. I don't know if anybody has checked LR Lakes financial results for the past 5 years. The result has not been really impressive. You have the right to go and sell to investor now. You've gotten the mandate to help the company to raise money. That's when you don't have to talk. You explain. You do everything. Even after identifying investor, even it could be public. It could be you that I'm talking to you like this. I'll tell you why you should buy Alex. Just like Mr. Steven said, like, oh, they operate in the same sector with Como and Presco, and considering that, look at them, they are relatively cheap, and then they have future prospect. They are looking at acquire a company and all like that. I remember during Sterling Bank, I was part of the market-facing person in my company. So at that time, I already knew Sterling Bank was their profitability had been improving. All those things like that. You know how to talk to investors, and then you talk to them. You look at the dividend yield of the company. You forecast. You see, you're bringing money from investors. They want to hear meaningful things from you, and you must be ready to answer any question they are willing to ask you. Investors, when it comes to equity market, investors are looking at two way of making money, either capital gains or dividend. Is this company paying dividend? Okay, well, what's the yield? Oh, okay, last year they paid maybe 6%, right? You could say, see, they paid 6% yield last year, and then this year has been favorable. You look at the economic condition this year, you look at the results, most companies are coming back to profitability, the FX is stable. You see how to connect all those things together for them, because public offer is a lot of, you need to make a lot of noise to investors. You see companies doing jingles. I think FCMB, I did not have account with FCMB. I did not have anything with FCMB. I got their email, I got their message. I was like, Azal now. So a lot of publicity and all like that will be done when it comes to public offer. I think that's the toughest equity transaction. And then when it comes to offer for sales, okay, you're not disturbing yourself. It's just that one person, one investor willing to sell stocks to another person. It could be done at a block sales. They used to call it block sales at times. That it wouldn't be like trade that will not affect the market transaction like that, because if such trade occur in the flow of the market, price can either double or decline badly whatsoever. Is a block transaction like that. You just see transaction exchange hands, just like one investor selling to another investor. It's just that the proceed of that kind of transaction is coming to investor, not to the company. So company have sold shares in the primary market. People that are selling, buying, selling in the secondary market does not really consider the company, but then company needs to intervene at times. That's why you see directors also buying, doing some defending of stock, or at times it could be that they are also buying for themselves also, just to stabilize the price of the market and all like that. So I think that's that when it comes to talking to investors. If it is debt instrument, it's very simple. It's just that those institutional investor or people you want to invest to, they'll look at what's the cost they've promised investors and what's the cost you are bringing to your offer. They think, should we buy it? No, it does not match our cost of capital. No. So this is favorable to us. Oh, it could even be book building. I don't know. Don't let me go complex. That you tell investors that, okay, which rate are you willing to which rate will interest you? You say, see, okay, on this your debt transaction, give us 20%. 20% we are good, we will invest. So you'll be like, okay, 20%, that's fine. Okay, let me talk to my client. Your client now is your company, the company you are advising for. You talk to your client, see, okay, I've seen some investors who are willing to put money, but they are saying 20%. What do you think about 20%? Is 20% fine for you? Will you be able to fund 20%? See, with this, no. Rates are coming down. I don't want to be in a lock position where I will have promised investor 20%, and the next 2-3 months, rates are already very low, whereby I can still issue at, let's say, 15%. So I will now have promised investors 20%. That's how it really flows. So it's more of considering what the market's saying, what's the macroeconomy saying, and all like that. So I think that's that as to engaging investors to come and put their money in deals. So I don't know if I answered your question. Thank you.
Thank you so much, Olayemi. That was well and beautiful articulated. I was able to get some of the concerns. I think you mentioned that the cost of capital must not be higher than the returns you are and the investments you are making. You
Of
also
course, yeah.
mentioned, yes, you mentioned profitability, dividend at the end of the year for investors. Yes, you mentioned a lot of things. I hope we are all jotting. I hope we are taking some of these things down. Thank you so much for that, Olayemi. All right, so I would like to take the other side of this question to you, Mr. Steven. Please, are you with us, Mr. Steven?
Yeah, I'm with you, Simon.
Yes, sir. I would love to take the other part of this question to you. All right. So based on your previous explanation, one of the concerns you mentioned facing um sales and trading, or like say the light market was the CGT in this previous like the tax reforms and the fear of the capital gains tax reforms actually affected the market. So I'd like you to give us other concerns that might affect how investors behave or how investors might move in the market. So based on the Nigerian system. Thank you so much, Stephen.
Okay, I want to say Olayemi have said it all, but just to add to it, investors are majorly capitalists. Investors are majorly capitalists. So when I'm investing my funds, I am looking at my return on investment. Basically, what do I stand to benefit? How do I stand to benefit? Now, when it comes to return on investment, it will interest you that people are not just interested in monetary gain, but they are also invested or interested in sustainability. Now, in the world at large, we would see the move that people are doing a lot of ESG. What's ESG? Looking at sustainability, looking at ways of creating sustainable energy, and there's a lot of investment in that field. So investment has gone beyond the space of just looking at monetary value into how the world can be sustained. Now, recently, the government of Lagos State issued a green bond. I stand to be corrected. Is that true? Please allow me, put me in the check.
Yes,
I like
yes, yes,
all right.
yes. They did.
All
They
right.
did.
Yeah.
Move on.
So
14
what
billion.
was that bond? What was that bond targeted towards? If you look at it, the investment or the return on investment for that would be they are promising our investor that on the long run we'll be looking at our climate not just run by fuel, which is depleting the ozone layer. Sorry, I'm a science student, so I can speak to that. We are looking at a way of sustaining the world, not just making money. Making money without having good health is a problem. So we are looking at other sources of energy. We are looking at the solar. We are looking at biogas. We are looking at other sources of energy that are not harmful. So to some investors, that is a return on their investment. I want a situation where my generation to come are not affected by what I'm affected to and what is affecting me. That is one aspect. So there's a lot of investment in green bonds, climatic bonds. There's a lot of instruments now. I'm speaking on the debt instrument now. I look at Eurobond. A lot of Eurobond that is being raised now is targeted towards sustainability. So in as much as the investors' monetary situation is put into consideration, we also put into consideration the world at large. That's one part. And then he also spoke about the two major ways investors make return on investment is by capital appreciation, capital gain. That's for the equities and dividend yield. And then when we talk about the debt instruments, talk about coupon in the Eurobond. Coupon is the money you pay to your investors. Depending on how these bonds are, what's it called? The duration of the bond, 10 years, mostly 10 years, 10 years, 5 years bond. You pay them coupon till the maturity of that bond when they get back their par value, that's the face value of whatever investment they get. So majorly, the last question, I spoke about CGT, how it affects investor sentiment. Yes. So if you see, there's a lot of seminars and webinars going on right now. In short, there is I don't think I should mention that. Yeah, I'm not actually to that because it's a platform. A lot of people are trying to get exactly what it is. How is the tax going to be charged? How is it going to be prorated? How is it going to be calculated? So there's a lot of sensitization in that space. And I don't know if you guys know of Oyedele, Taiwo Oyedele in that space, doing a lot of reforms in that sector, trying to see how we can harmonize what he has said. You had discussion with some of my colleagues in the industry that how do we transform what is on paper or what is theoretically said into practical, because we should look at that. It's not just about creating reforms. Nigeria is a country blessed with great minds. We are always good at putting pen to paper and creating reforms. But how do we measure monetary policies with fiscal policy to produce an environment that the cost and standard of living becomes comfortable? So a lot of people are asking questions. How is this capital gain? If you look at the last time, this guy even came out, Wale Edu came out, to tell them that there's a lot of revised discussion going on in that space on how to see how to bring it down from the 30%, to either 25 or 20. Like I said, I stand to be corrected. I have not really looked at it holistically. But these are the things investors that will be going into 2026 will be looking at. How to position. If you've been checking your phone, even on Twitter, on Instagram, on TikTok, you will see things like nowadays you should pay attention to your narration. Yes, a narration for business owners, private companies like Olayemi have said. You have to tell us your narration. If you are doing an expense, it's as simple as just right there. Expense, this so and so is what I am paying for. Otherwise, if there is no major interpretation to what you are paying for, then I'm sorry, you might create more problem for yourself, because you can't expect the government to know what each and every of the transaction is targeted towards. So we are looking at an economy in the next few years where people will pay proper attention to government reforms, government policies, not just kicked by the corner, not just passed around, but now it will be implemented in full force to see how the country will do better. So investors are looking at that from the capital gains side. Okay, how will this affect? What am I supposed to do? How am I supposed to position to make sure that I get a return on my investment? And also to the other part of it, when it comes to those one have always been in the public domain, interest rates, how it affects investors, how investors react. Like, people were expecting that the interest rate will be, what's it called? There will be, a decrement in that, but no, it was left flat at 27%. So people are looking at it very well. Cardoso earlier on in the year said that he would try as much as possible, that the CBN governor, to make sure that he tries to stabilize the naira, because if the naira is stable, I mean, it has been playing around the 1,004 levels, 1,005 levels throughout the year. Throughout the year, I can tell you that from the Nigerian foreign exchange market, that's NAFEM, that regulates that space. So there's a lot of work put into it to make sure that naira is stabilized. If naira is stabilized, I mean, you have, foreign investors, and Nigeria need a lot of foreign investors. Why do we need that? We need to grow our, our reserves. Yes, we need to grow our reserve. And for us to grow our reserve, we need direct foreign investors. And direct foreign investors can only come into your country when there is what? When there is stability in your naira. And then not forgetting October shenanigans around the old Trump coming into the country, to step into our military. People came with a lot of sentiment about, not respecting our sovereignty. So when there is a high level of insecurity in the country, I mean, you won't expect me to, sorry, I beg your pardon. You won't expect me to invest, my hard-earned money in a country where I am not sure of, the next few years in the economic sector and the political sector. There's political and economic instability in the country, one fueling the other. In our country, that once the political terrain is not stable, therefore it affects, the economy. It boils down to the layman, food inflation. Even as much as inflation is rebasing, if you look at those figures, food inflation has been on the high. Why is it so? The northern part of country, the northern part of Nigeria is the largest producers of our arable crops. Yes, most of the things we eat, our rice, our corn, our tomatoes. So if farmers don't go to farm, you would agree with me that yes, the cost of goods will increase. So therefore, also affecting the economy at large. So it's not just boiled down to the figures you see. How investors, actually those investors that do due diligence, they look at everything. Somebody they ask you smart questions. They don't just dwell on the macros. They also look at the micros. They look at how each and every one of these economic indicators interact with each other and affect the market. So it's always advised, or investors, if you see a very experienced investors, they do what they call what's it called now? Sorry, I'm trying to look for that word. Diversification. They don't put all their eggs in one basket. You don't see an investor putting all his money in equities. They put it in the equities and also put it in the fixed income space. You understand? So that they can always cushion the effect of any shock. It's called the shock absorber. So when the equity market is not doing very well, I switch over to the fixed income. And when I make considerable good spreads from the fixed income, I bring it back to the equity space. So in a nutshell, I would say investors look at the overall well-being of the country to invest. Nigeria, like I said, is blessed. Nigeria is the second largest in Africa, if I'm not mistaken, followed by South Africa. So Nigeria is the second largest in Africa and makes it a hub for investment. So I mean, I don't want to be religious now, but looking at, in spite of everything that has happened in this country, people still come to invest. People still believe in this country because Nigeria is the one place that you can always get a return on your investment. I'll give you this for free. There are many Nigerians in diaspora that borrow in America at a subsidized rate and bring it into this country and make a good spread and go back to pay back their debt position and make considerable spread. I don't know if I've spoken a lot of English, I've confused you, or you understand what I just said. There are a lot of Nigerians that borrow dollar cheaper and bring it into this country and put it in your equity market and make good spread, not on just dividend, but on capital appreciation and pay back their debt position and make good money. So if the foreign guys can see what we don't see in this country, I mean, it's left for us to sit down, and invest in this country. Like I always say, as my last word, the markets will always be sentimental. There's always a bull market and a bear market. Irrespective of whatever position it stands, there's always money to be made. Thank you.
All right, that was a very, very, very wonderful submission. Thank you so much to both of our speakers, Mr. Olayemi and Mr. Stephen. I hope we've been getting something from this webinar. All right, so we've gotten a lot actually, and it has really been an impactful webinar. So I'll just like a little piece of advice from each one of our speakers about your particular area in finance and an advice you can give us. We are trying to build our career from the university, trying to know how the real world works. And I just need a little piece of advice from both of our speakers about your own area in finance and how it might help us in our future roles. Thank you so much. Mr. Olayemi, you can go first, please.
All right. Thank you so much for that question. I think first thing I must commend the executive of this club or Bureau of Finance for putting this together. You people are doing amazingly well. Yes, as a student, still in institution, trying to figure out and prepare his or herself for what next after school, I think you're on the right track. So, well, I used to say, everyone help those who help themselves. But at times, I used to say, well, everything is still in the hand of God, but then we just have to try our best. You get what I mean? So I'm not the type that will say what will be, but then we just have to just try. But then at the end of the day, Almighty Allah, God knows everything. So we just have to put in our best. So coming back to your question, yeah, I graduated from OAU also last year. I was just a student last year. So that's why I told you to avoid the use of SAR. So I was in OAU, I was like student like all of you too last year, just even doing my NYC currently. So I think first thing first, your communication skills is very, very important. Regardless of the technicals, regardless of your Excel, So regardless of the Excel whatsoever, your communication skills is number one that you need to at least work on. It is very, very important. You don't want to come to interview and you don't know how to even present yourself, how to say yourself. So that's that. And then, of course, your communication skills keeps you going. You've seen many people that are not really so sound in technicals like that, but they can communicate clearly and all like that. So that's that. Then another thing I think will be beneficial for us is to start improving ourselves on the technicals. It's very funny. The finance space is very, very funny. Like, I've been in an interview where they asked me they asked me a question that how many basis points? They asked the question like a basis point. They just painted the scenario if that time inflation, that time MPR was 27.5. They just painted the scenario that if MPR increases by 100 basis points. So what would be the it in percentage? So you see, that's technical a little bit for someone just coming out of school. But then just because you've been exposed, maybe through ICANN, through joining clubs like this, you know what basis point is. So I was able to at least answer that technical at their own level. It was technical of the technical question, but then I just put in a smile into my mind, like, okay. Then I said, oh, thank you for that question. I shall explain myself and let them know that first thing first, we need to know that 1 basis point is equal to 0.01% and all like that. So it was like, oh, this guy knows what he's saying. So that's that. So you start to build your technicals and your commercial awareness also. I think commercial awareness also is important. You can't tell me you can build model, you don't know what inflation is saying. Okay? You can't tell me you can build model. You don't. And when I ask you what's GDP rate, you say you don't know. 3.98. I will be like, in fact, if you meet me in an interview, I'll ask you question around what's key things in the market, inflation, GDP, NPR. I may not be asking you about treasury bill whatsoever, but those three are key. And of course, by the time you get yourself to an interview phase, you want to sell yourself, you want to talk about, let's say, you're not an expert. Nobody wants you to be an expert as you're coming. I don't know if you get what I mean. So of course, you want to show that you are teachable, you can learn, and you are ready to go on the job. So of course, I would prefer to hire somebody that will train me with lesser effort. You get what I mean? Than someone that will be telling, do this, do that, do this. So that's that. Just the eagerness to learn and the ability to improve. And also, don't forget, it's necessary you know your technicals, at least just basic of. You don't need to waste all your time on it because you might even get to banking, just like I did. When I get to IB, I used to think it's all about model. I don't know if anybody goes through my profile on LinkedIn. I used to post a lot about financial modeling. I tell you, when I get to IB, I've never done 5 models in IB. But then what keeps me going is my market intelligence, market awareness, commercial awareness. See, I used to check Arise TV every morning. I'm on it, checking it out. Once I'm done with Arise TV, I switch it to Bloomberg, just trying to at least try to know what's going on. Those little things are what are really keeping me going. Not really the models, but then your PowerPoint. You need to improve on your PowerPoint also, of course. Then Excel, yeah, you should know how to use Excel. I bet you not. It's a competitive advantage, Excel, just to work with shortcuts, you see, a lot like that. So it's very, very good. I think that's that from me. And as a student, I bet you not. Try to improve on your CGPA too.
Thank you so much,
Thank,
Mr.
thank you.
That's that's very
Yeah,
important. That's very
thank,
important. Thank you so much,
yeah,
Mr. Olaye. Mr. Stephen, over to you, sir. Very, very short, very short. Are
All
you
right,
with us, sir?
I'm with you. I'm with you. So you said I should make it very brief. I mean, Olayemi, I've explained. I like the way you explained it. Very, very simple. I would just say one or two things. Just one or two things. First thing, you are not expected to be a guru. Your result already speaks for you to take you through the door. That's why I keep telling people, don't come and tell me school is scam. I don't like hearing that statement. Personally, I don't like hearing it. When you come and tell me school is scam, I don't just like hearing it. You understand? It's I don't know how to put it, but it's not a nice thing to tell me that. I studied mathematics. I came out with a 2-1. When I went to school, although I went to school a little bit advanced, I got to university 20. Yeah, I was at home a little bit late. But I knew what I wanted. I knew I wanted a first class, and I ended up having a second class upper. And where I stand, what took me into that room was just because I came out with a 2-1 in mathematics. So nobody should deceive you that result is not opening doors. That's nonsense. So get a good grade. First things first. To always speak for you. Don't allow anybody to distract you. Get a good grade. Then second, nobody is expecting you to be a what's it called? A command of everything. But know how to speak the lingo. What do I mean by lingua? Know how to speak the lingua. Know your numbers. Know what is happening. You can't tell me you're a finance student, you don't know MPRO, you don't know inflation rate, you don't follow GDP figures, you don't follow oil price analysis. That one's another thing people don't follow. What is OPEC saying about oil? How does it affect the if I'll take an example. A friend of mine studied political science education. He had been in search of a job for a year now. So he was going for a bank interview for just customer service. And I told him, do you know the governor of CBN? He was like, oh God, I don't go out that country. Go and look at it and know what the interest rate is saying. And lo and behold, after the interview, this guy called me and said they asked him who is the and now this is the way they asked the question. They said, who is the governor of the Apex Bank? They didn't say who is the governor of CBN. So when I was able to explain to him, I think that the Apex Bank of Nigeria is CBN and the governor is Cardoso. So imagine we didn't have that conversation before he went for that interview. So these are things we need to really put into consideration. You can't say you are a student and you don't follow what is happening in the real world. Please do that. So most companies are not looking for experts. Like I said, they need somebody they can teach. Just like Olayemi has said, you can learn. You are teachable. And then your space, always try to connect with people on LinkedIn. Olayemi and I connected on LinkedIn, and then before we know, we are doing interaction. I like people that come to my DM on LinkedIn. We talk. As long as you are in for growth. Even me, I'm a product of growth. Where I work currently, I got the job via LinkedIn because I post on on LinkedIn every day, just daily market reports. And then always be confident to say what you know. Be loud about it. Be loud about what you know. No, see, it's funny enough that if you look at some of my write-up, there are little errors everywhere. But because I am loud about what I know, they're looking at somebody that is willing to learn. So don't just, some of us have potential, but we are boxing it in. And people that don't even have enough of what you have are doing it. So that's my little advice to you guys. Thank you very much.
Thank you so much, Mr. Steven. That was very, very, very well received, and we'll work on that. I just want to ask the house or the audience if you have a few questions for our speakers before we conclude this webinar. It has been a really impactful one, and if you have a question or something to say, I would just like you to signify by raising your hand. Question, contribution, any suggestion you'd like to make. All right. Emmanuel, you can go ahead. Go ahead. Onokwe Emmanuel.
Okay, okay. Good evening, everyone. And I want to say thank you so much to the speakers, Mr. Olayemi, Mr. Stephen. Thank you so much. I really learned a lot from everything. So now my question, I want to direct my question to Mr. Stephen. So there was a time I was talking about how that investors now are not so much based on are not so much focused on monetary let's say aspect now. They are more concerned about both monetary and sustainability. And I think he continues to mention how that in his explanation, he mentioned how that Cardoso is actually plan on working on how that he can actually stabilize the naira. And Mr. Simmons talked about how that he actually trying to implement some policies and some other stuff. So now my question is, by the reason of stabilizing all this stabilizing naira now, I feel some policies, some factors might want to be implemented. So how so my question now is do you think by the reason of implementing these policies or these factors, do you think stabilizing naira might actually want to affect some side of the economy? I feel some policies might actually be introduced, and this policy might actually want to affect probably an aspect of the economy that might actually want to balance this implementation of or this stabilization of this naira as a whole, as general. I don't know if you actually get my question, Mr. Steven.
All right.
Thank you. Before Mr. Steven answers, please apologize. I want Peter to ask his own question also, so he can take the answers together. Peter, please ask your.
Thank you.
Please articulate. I don't think we can hear you. Hello? We can hear you now. Is it just my own network, or please react if you can hear Peter? Oh, all right. So I think it is the network. So I'll just like Mr. Stephen to respond to the question from Emmanuel, and we just call it a day. Thank you.
All right. To respond to his question, I would say when it comes to policy making, there is two major: the monetary and the fiscal, and these two aspects interact with each other, or they go hand in hand. For you to establish a monetary policy, you must have a fiscal policy to also combat it. For example, you have the interest rate, which is a major monetary policy in order to stabilize the rate at which people borrow money and lend. That's major sources of interest rate. I stand to be corrected. And also you mentioned the naira stabilizing the naira as the major thing you talk about was stabilizing naira, how it affects and how it affects the economy and how it will not counter the effect of what is being done. I think that's what you were trying to ask. How is it that the naira is being stabilized if they put if they implement some of these policies, how it will not affect exactly? Okay, yeah, I saw your thumbs up. So the way it works there, we can't have a perfect you cannot have a perfect economy. I don't know how to put it. You cannot have a perfect. You can only have a near perfect. Just like you have inflation. Do you know I know you know that every economy needs some level of inflation to thrive. So we may not have deflation. Deflation is not always a good one. No. So in Nigeria, what we even have is not inflation. What we have is stagflation, where the inflation rally around a particular place for a while. So, but what Cardoso is trying to do is that it's trying to make sure that it brings it to the lowest minimum. So, how does he actually stabilize the naira? Now, first thing first, if you look at Wale Edu, some team of people went to Rwanda recently. My CEO was among them. They want to try to expand the Nigerian stock exchange. They want to make it an African kind of something. What they want to do is that they want to have a baseline currency in which we can use to trade in Africa. Now, this discussion has been a debate for a while now. Yes, it has been a debate for a while. They've been going back and forth. You also have I don't know if you read of what do they call them now? They are trying to decentralize the dollar. That's the word I'll use to make sure that the dollar is not just the reference currency, because it's generating a lot of instability. So that is what Africa is trying to do, and what Cardoso is trying to do for Nigeria is that we don't depend on dollar. Before Cardoso came into office, there's a lot of things we buy in this country that is dollar oriented. You go to the market, the average woman on the street selling yam is telling you that why the price of yam is high is because dollar is high. What does dollar got to do? I mean, in a country where we live in, where almost all transactions are done in naira, why would the dollar have an effect? It's because everybody is trying to earn a dollar. Everybody is chasing the dollar as a reference currency. Why? Because the dollar is more stable. I mean, you can also agree with me that anybody who earns in dollar stands has a higher purchasing power than you earning in naira. But what Cardoso is trying to do is that he's trying to give the naira strength by implementing some policies. I'm trying to think one of the policies he's putting in place now. I cannot wrap my head in anyone currently, but I know they are trying to do a lot on that space. Okay. I think one of them is the border. Now the border closure. Trying to make sure that we use more of Nigerian goods. Try to make sure that most transactions are routed in naira. Now, even if you go to the space, the shipping space, I know the shipping space. There's a lot of transactions that have been, not just limited to dollar. Now you can actually do transaction in Japan yen. That's trying to diversify or or to decentralize transaction from the dollar, because even your so-called what's it called PEP, that's politically exposed people, try to route a lot of transactions in dollar. You see that even the dollar rate is not stable. Why is it so? Because most people go to buy dollar and bring it to the street to now exchange it at a higher rate in in naira. So if you're watching the news, bureau de change. I know we all know what bureau de change is. The CBN is trying to regularize that space. Trying to put regulatory in that space, so know that it is only the accepted bureau de change that we should use. Because a lot of people were playing in that space and the market was not regulated. But now Cardoso came in and said, no, enough of that. Now we'll make sure that if you want to do any transaction in dollar, you want to change dollar, these are the accepted ones. These are the ones that are accepted in the country. So when you do a lot of regulation in that space, you try to curb a lot of unforeseens, regarding the dollar. So I don't know how to put it to you, but what I'm saying in essence is that going onward, we would see a lot of change, in that aspect. I mean, if he stays true to his word, we'll see a lot of changes in that space. That dollar will no more be a big thing, in as much as it's a reference currency in the world. But we want to make it in such a way that Nigerians do much more in naira. Thank you.
Thank you so much, Mr. Olayemi. That was beautiful. All right. I would like to take the question from our VP Operations, Deborah. You have the floor. Debbie. All right. So Emmanuel. Okay. Debbie, you
All
have the
right,
floor.
right. All right, good evening, everyone. Good evening, my speakers. I can confidently say I actually benefited from this meeting, and I'm grateful for that. So, my question is this: one of the speakers states that he follows news on Arise, Bloomberg, and other platforms to get market information, analysis, and others. So, my question is that what practical roadmap what practical roadmap would you recommend to beginners who are just starting their journey on finance and market analysis? Thank you.
I would like Mr. Olayemi to answer that, please.
Okay. Thank you so much. That's a good question. Let me just say, for beginners, I will not lie to you. The likes of let me just list them. The likes of Nairametrics could be helpful. Nairametrics could be helpful. There is also this one they call ProShare.co. There's this guy, the Market Force. I think they are up to date. The Market Forces, and then there's these guys. They call themselves Deal and Advisory. Well, even though they used to try, but then it's still a way of getting information. I think there's another one. You could as well just on X, on Twitter, you could follow people like Rufy B. I think I follow the guy back to back just to see what Rufy is saying. I think a day without checking Rufy B is not yet a day for me. That's that. Arise, I follow these guys on Arise, that Rotu Zodiri, just to hear what's trending, global news, local news. It talks about those things. Well, that's that. Then what was it again? I'm coming. I think then you should know how to navigate NGX just for corporate disclosure. That's where company upload whatever they want to do their looking forward statement, their annual general meeting, their plans, their financial results. Then you should know how to navigate CBN website also. CBN website. There's one site we call oil price, oilprice.com. Then I think I give it to Punch. I really love Punch. Oh, I will not lie, oh, because most of the Punch dot, I don't know, is it Punch.ng? Punch used to have some news that are not out there. Like I will be surprised when I check Punch. I see news on Punch that you will not see on Nairametrics and all those ones. But these are the ones I could remember. I put them in the chat, but then there are still more to it. So that's that. So those are the ones I could remember. You could just look at the chat. Do I need to pin it? Then you could just check those websites. Keep checking them often. I check them often. Like a day, I check all of them. So that's that. Thank you.
That was well said, Mr. Olayemi. Thank you so much. And he has already highlighted some of these websites and some of these apps on the chat list, so you can just copy it, send it to your notes, or just send it to yourself, and you check it out later. I really want to thank both of our speakers for a very, very well said and very well, a very impactful webinar. I want to thank the executive team for putting this together. This was very beautiful, and I want to thank all of our listeners, all our members, people who listened there today. I hope you've gained a thing or two. I hope you were jotting all this while. I want to really thank everybody. It was a very beautiful one. Thank you so much, Mr. Olayemi and Mr. Stephen. This was very wonderful. I wish us all a very happy, well, in the festive season, Merry Christmas and Happy New Year. And I wish us a wonderful night rest. Thank you so much. Bye.
Please, how do I get the list of the sites Mr. Olayami mentioned?
I believe it's in the chat, Emmanuel. Check the chats. Check the messages. Both Mr. Alani and Mr. Steven dropped something. Check the chats.